Welcome, everybody. My name is Mary Ann Rothman. I'm the Executive Director of the Council of New York Cooperatives and Condominiums, and one of the founders of the Action Committee for Reasonable Real Estate Taxes. And we maintain that reasonable real estate taxes is not an oxymoron, and that someday we may get to reasonable real estate taxes that deal fairly with all New York City taxpayers and that are easy to understand. I'm not sure that day is very near, but we'll keep trying. Some of you are new, and for that reason, we always in these meetings start with some background. For those of you who've joined us before, thank you for your patience, or thank you for enjoying this refresher that will give you really a brief history of the Action Committee for Reasonable Real Estate Taxes. In February of 1990, feeling that we had been taxed and taxed and taxed, the Council of New York Cooperatives and the Federation of New York Housing Cooperatives got together and called into being this Action Committee for Reasonable Real Estate Taxes. We said it isn't fair. Co-ops and condos are paying much more property taxes than other homeowners in the city of New York. Who are the other homeowners? They make up Class 1, and you'll hear more about that in a moment. I just realized I failed to introduce my fellow speaker, and I'm going to correct that right this minute. Bob Pollack is a tax certiorari attorney, meaning that he is very skilled in understanding property taxes. He is also a member of the board of the Council of New York Cooperatives and Condominiums, and has been a wonderful supporter of the Action Committee for the last several years. Bob is going to talk to you about property taxes, so I'm going to try not to steal any of his thunder. So there we are in February of 1990, thinking that we are very heavily taxed. And we were for 1990. We did some screaming and yelling. We organized people. We asked them to talk to their lawmakers and to government, and we got listened to a little bit. In 1992, then Mayor Dinkins created a blue ribbon panel on property taxes. They filed the report with their conclusions in the final days of the Dinkins administration. And in their conclusions, we were vindicated. They said it's not imaginary. Co-ops and condos pay far more than their fair share of property taxes. And then, alas, the Dinkins administration ended, and we waited, and we waited, and we waited. And then in 1996, the Giuliani administration asked the state legislature, because all property tax issues for New York City have to go through the state. He asked for an abatement program. This abatement in 1996 was to be a 2-year abatement as a step in the right direction toward equalizing property taxes, while the city worked out a long-term plan for property tax reform. 1996. So the 2-year abatement got enacted, and as it got near the end of its 2 years, it became obvious that we needed to extend it. And when it got to the end of that 3 years, it was extended again and again and again. And we're now up to the 8th extending of the abatement program. In February of the year 2000, 10 years after the founding of the Action Committee, Andrew Aristoff was Commissioner of Finance of the City of New York. Albany had just eliminated the commuter tax that New York City used to be able to levy on people who made their living in the city but lived outside of the city. That tore a big hole in the city's budget. And Commissioner Aristoff said, with the loss of the commuter tax, the city's long-range plan for property tax reform is the continuation of the abatement program. So there were multiple extenders. And then with the 2013 extender, there was a change made so that the only people eligible for the abatement were those for whom their co-op or condo was their primary residence. And if your co-op or condo was your primary residence, you could get the abatement on up to an additional 2 units in the same building where your primary residence was. Why 3 units? Because class 1 is 1, 2, 3 family homes. So it was kind of mirroring that. Then in May of 2018, Mayor de Blasio formed an advisory commission to work out a plan or to study the property tax system and perhaps work out a plan for property tax reform. They held hearings in all 5 boroughs to hear what people were concerned about. In all 5 boroughs, people were concerned about the very low assessments on the 2 single-family homes that Mayor de Blasio owned in Park Slope as compared with theirs, but there was lots of other testimony as well. And they began their deliberations, and then COVID came. And they I'm told that they continued their deliberations, but certainly not in the public eye. When it came time for the 2021 extender of the abatement program in the spring of 2021, a prevailing wage provision was imposed on all those buildings receiving the abatement that, where the average assessed value in the building was $60,000 or more per unit or more. This prevailing wage was implemented during the current fiscal year. It has caused an enormous amount of challenges. And of course, it's reduced, it ended up in reducing the number of homeowners and co-ops and condos receiving the abatement. Then at the very end of December in 2021, Mayor de Blasio's advisor commission came out with a 10-point plan for property tax reform. It didn't look at the whole property tax system, but what it did do, what it did propose was that class 1, the 1, 2, and 3 family homes, co-ops and condos, large, for the most part, all be put together in one property class where assessments would be based on actual values. When you base an assessment on on the sales value, at least you can go to the market and see if the assessment is accurate or roughly accurate. But this scares a lot of people because they say, oh my goodness, the assessment's going to go up. I'm going to pay 10 times as much taxes. It doesn't work that way. When your assessment goes up, the rate on your taxes goes down. But we haven't gotten any further with the 10 points. In our February meeting of the Action Committee, we thought that the City Council might be moving forward on those 10 points, and we commented on them and so on. I haven't seen much lately in the way of appetite to move on with this. So we are in May of 2023 at a point where, happily, as you'll see in a later slide, the abatement program is about to be extended. We don't necessarily know that the city is looking soon to take up tax reform. which means we need to understand our existing tax system. And that's not easy, but Bob Pollack is going to give us property taxes at a glance. Bob, all yours.
Okay, so how did we get into this predicament with this crazy system we currently have? So there was a time when the statute that the city was supposed to assess at simply read, all property shall be assessed at its full value thereof. But that really wasn't what was happening. The assessors had been treating residential properties much kinder than they were treating commercial properties, and all of them were assessed less than 100% of their market value. So, for example, if residential were at 25% of their true value, commercial were at 50% of their true value. And this went on for a long time. There was a de facto classification scheme that the assessor just simply implemented without any basis in law. A professor, Hellerstein, brought a lawsuit, and he took this all the way up to the state's highest court, Court of Appeals, and the court held, no, Professor Hellerstein, you are correct. All property shall be assessed at its full value means it all should be assessed at 100% of its full value. Well, in my hypothetical, where the residential was 25% of its market value and the commercial was 50% of its market value, if everybody went to 100, that meant that residential property would have to go up fourfold and commercial property only go up twofold. So the state legislature realized that that is cannot, all the voters are in the residential arena, so that cannot be the possible answer they come up with. So they wrangled this around. It took them 6 or 7 years to come up with a solution. The decision came down in 1975. It was 1981 that they passed a comprehensive change of the real property tax law as it relates to New York City and parts of Long Island. And what it provided for, it created 4 classes of property that each class could be assessed at a different percentage of value. So class 1 were the 1, 2, and 3 family homeowners. And the benefit that they got is their assessments could not be increased by more than 6% a year, nor more than 20% over any 5-year period. Class 2 were residential, multifamily residential properties, more than the 3 units. So that included your co-ops, your condos, and your rental properties. And the benefit that the residential got were 2. 1, any increase in assessment would be phased in over a 5-year period. So that meant if there were any sharp changes in assessment, at least there would be a period of time when it could phase into that number. And also for co-ops and condos, they wouldn't be valued on their true market values. They'd be valued as if they were rentals. What would this property be worth if it were a rental? That meant what would the income be? What would the expenses be? What would be the rate of return an investor would seek? And that yielded a much lower value than co-ops and condos were trading at or continue to trade at. And that was the benefit that Class 2 received. Class 3 were your utility properties, Con Ed, Verizon, and Class 4 was all others. That included your hotels, office buildings, most vacant land, etc. So that's how Class 1, with its 6% cap or 20% over any 5-year period, ended up getting in a much better position during that time period. Assessments were going up sharply on co-ops and condos and residential property. And the Class 1 was locked into a stepwise increase. And it wasn't long before it was clear that they got a better deal. And that's when everybody jumped up to the plate and and caused this change where there had to be some kind of relief valve for the co-ops and condos. They were becoming a much greater percentage of the voting population. And that's when the co-op condo abatement came into being that Marianne was just discussing. So now, incidentally, when this S7000 was proposed, it was passed over a gubernatorial veto. The governor vetoed it, but they got a 2/3 majority and pushed it through. And everybody had criticisms of the system. There were a lot of inequities. There were going to be a lot of problems. And many of these predictions about what was wrong with it came true. But, here we are 42 years later, and it's still the system we're living with. And it's a system that people have been, complaining about for the past 41 years at least. And that finally came to the point when our Mayor de Blasio with Corey Johnson set up the Property Advisory Commission to come up with this, what are we going to do, this new solution. And as Marianne had mentioned, they did, it's more of a market-based approach where what's the value of your particular co-op, what's the value of your particular condo. And if in fact assessments do go up sharply, well, the city is going to collect X amount of dollars every year. By the way, the city collects $31 billion a year from its property tax. And we have a little, let's see, the slide. It's 46% of the city's tax revenue. So it's a huge component, and it's a very easy tax for the city to administer. Nobody can pick up their building and take it to New Jersey. So you're sitting right there. They put a value on it. There's a tax rate. They send out the bill. If you don't pay your taxes, they take your property. So it's very efficient and easy for the city to administer. But having said that, there seems to be a lot of, a lot of people are upset with the way it works, and understandably so. Real estate taxes have been sharply increasing. I'm sure you're all seeing in your co-op budgets, or if you condo, you get the bill directly or through your lender. Real estate taxes have been year over year been going up. And I'm wondering, can we jump ahead to a slide that we have coming up? Thank you. So this is the first year. You can see in 14-15, where we start, we just kept steadily going up, 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 up. Then we hit the pandemic. Now, even though the pandemic started in March of 20 for all intents and purposes, taxable status date, the date that the city values property, is January 15th of each year. So on January 15th of 20, we hadn't even heard the word COVID. So that's why, even though we were living with COVID during that entire time period, the 2021 tax year runs from July 1, 20 through June 30th, 21. Your assessments were as higher than it had ever been. It was the following year that the city did give us a nice, break on taxes. But you can see for 22, 23, they got right back. They jumped right back into action. They actually, for co-ops, the increase citywide was only 1% this year. So they did ease up on it. On condos, they were a little bit more aggressive. They went up 4% this year, and they didn't get as big a relief in 21, 22, and that's in large part to the transition assessments. That's the 5-year phase, and we discussed earlier. So any increase in assessment that you do receive that's not attributable to a physical improvement is phased in over a 5-year period. And you can have 5 of these phase-in clocks running at any given time. So if the city year after year is increasing you 5%, each one of those increases is throwing on 1% per year. So in the aggregate, if you're increased year over year, 5% year after year, you're going up 5% a year with the transition assessment. Incidentally, you pay on the lesser of the actual or transitional, and that can happen when the actual actually comes down. It can actually drop below the transitional. So that's the system we live with currently. And one of the problems with I mentioned earlier that it was a Court of Appeals decision that withheld Hellerstein's position that the then taxing scheme in New York City was unconstitutional and illegal. It still took them 6 years to come up with a solution. It's very difficult. If there's going to be winners in a tax revision, there's going to be losers, and they're not going to be happy. So we see that right now, no one really, my sense is that no one has the appetite to tackle this huge issue and this huge problem. And they've kicked the can down the road. I'm sure that, the city council members want to get themselves elected first before they start tinkering with a system that hits so close to home on all levels with all the voters / taxpayers. Let's go back to our slides if we can. New York City property taxes at a glance. Thank you. Yes, it's the New York City Department of Finance, which has the Assessment Bureau. Every year, the calendar of events are new assessments are come out on January 15th. You have a very short time period in which to contest them for multifamily properties. Class 1, the 1, 2, 3 family homeowners have a little bit more time, but you only have 6 weeks to protest that assessment. And that's not entirely an accident that there's such a short time frame. The less people that contest their assessment, the less people who are going to pay less in taxes, and they make you move quickly. Bills go out in June, and it, depending on your level of assessment per unit, you either pay twice a year or quarterly. The lower assessed properties pay quarterly, and you pay in advance. So when you pay your tax bill on July 1, you're paying for the period of July 1 through December 31st. There are various exemptions and abatements that, some are attributable to the fact that the building was recently constructed. Some are personal to, that relate to the person that's actually in the premises, like a senior citizens or a citizens abatement or veterans exemption. And the last topic is the co-op condo abatement. Now, that is slated to run out on June 30th, 23. But Marianne, I don't know if you mentioned, but there's legislation pending. Marianne pushed very hard to get 4 years, because every 2 years, it seems that every time we turn around, we're fighting this battle again. And it's not an easy battle. And you can see, Marianne mentioned, there was a time when they suddenly said, well, it doesn't apply to everybody. It applies to just if it's your primary residence. Then they came along, they said, well, it doesn't apply to, just your primary residence. Your building has to pay prevailing wage. Now, a number of buildings elected to not pay, they looked at the two benefits and they said, if we pay everybody prevailing wage, that's a lot of money. We're better off foregoing the abatement. And they in fact did. But somebody's always tinkering with some aspect of it. So, which is why Marianne pushed so hard to try to get a 4-year extender, because, to put it in place and leave it alone for 4 years. But so far, the legislation has been proposed, and we're encouraged that it's being proposed so early in the year, but it is currently just a 2-year proposal to extend it for another 2 years. So this is a battle that just keeps getting fought every other year.
John Liu, senator from Queens, way back in January, introduced Senate 3252, which provides for a 2-year extender of the abatement. It's been making progress in the Senate. In fact, I had hoped to be able to announce tonight that the Senate had passed it, but we're not quite there yet. Ed Braunstein, also of Queens, has a companion bill in the Assembly. Braunstein's bill is A4972, and I apologize for not having them on a slide, but what we'll do is send you these slides plus the bill numbers as we encourage you to make your elected officials aware that we urgently need this abatement extender. One, right now, or as soon as you get the bill numbers from us, ask your state senator and your city council representative to support these bills, because it would be devastating if we were to lose the property tax abatement program. In general, do some politicking with all elected officials who represent you, because when you need help from them, you want them to know your co-op or condo, to recognize that all those nice people living in your co-op or condo are constituents, and that statistically co-ops and condos vote in much greater numbers, percentages, than the general public. Talk to your city council representatives about the general needs of your co-op or condo, because this is an election year for the city council. Normally, the city council serves for 4 years, but because they were elected before redistricting was done in the light of the 2020 census, they have to face election again in their modified city councilmanic districts. So this summer and this fall, you will meet many, many candidates As I say, make sure that they know your co-op, that you know that co-op shareholders and condo unit owners are very much committed to this city. We've bought our homes here. Most of us work here as well. And we anchor communities. We provide affordable housing for everyone who lives there, and we want to be able to continue to do that. Also, another way of having your lawmakers know your building, if you're back to doing social events, a barbecue in the summer, a holiday party, invite them. Let them really see your co-op or condo as a community. And then when you write and say, please support this legislation, or please help us get more police patrols on the street, or whatever, they will have been to your co-op or condo, they will know you and will better understand your needs. I hope we'll see you all again in February. And I hope one of these days we'll begin making more consistent progress toward fairness in New York property taxes.
Well,
Thanks
thank
for
you, everybody.
participating.